So what if I told you were using moving averages the wrong way, or at least crossovers the wrong way? I'm going to show you the 1348 moving average crossover strategy, the only strategy you truly need to get started in the market. Now, there are some layers to this, but I'm going to show you the simple crossover that started it all, trade1348.com. Now, guys, I brought 13 and the 48 mainstream, especially on YouTube. Every 1348 EMA video has been inspired by myself. I went ahead, I did the research, found the academics, tons of content on academics, and said, okay, well, instead of the 920, let's bring the 1348 on board. And a lot of other copycats here, but we are the original 1348, and I'm going to prove it to you how this can be a very, very simple system, make you very, very, very profitable, and how we evolved the system and why we evolved the system. So first off, let's look at this. What I have plotted here are my EMAs. We could simply go on over to our indicators and type in moving average exponential right there. You go ahead and add 3 to the chart, and add 3 more. Each one has its own values. So the first EMA is going to have 13, and I changed that to green. The second EMA is the 48, and I changed this to red. Now the third EMA, I need a trend governor. So I'm going to change this to 200, and I'm going to make it thick. That's what he said, but never truly accomplished it, huh? Okay, so we have the setup here. What are we looking at? Now, for the sake of content, you're gonna hear guys make it overcomplicated. We're gonna make this very, very, very simple. Looking at this, we see our bullish sentiment. This is why we use the 200 right here. You guys, I'm going to get into this. This is day 2 of my Express Funded account on TopX, utilizing my Trade 1348 system. But either way, we have the 200 here. Now, 248, 13. What does it all mean? Well, what it means is, if you're on the 5-minute, the 13 EMA is the average of 13 5-minute candles. The 48 is the average of 48 48 candles, right? And then the 200 is the average of 200 candles exponential. And the reason why we use exponential, not an SMA, is because exponential is more sensitive to price movement. And that's what we want, right? Because we want the EMA to be closer to price action and to reflect price much sooner. Moving averages are a lagging indicator. That is inherent of what it is as a device, but we use it differently. See, most traders want indicators that prompt them to speculate or to anticipate and jump into the market. And this is how I could show you that you're using moving average crosses wrong. So back to this. The green line is our 13. Our red line is our 48. Now, most would say trade the cross. No. If we got a cross and an extension, trade the bounce off the 13 and a continuation. We have a break up to 13, and we got the cross here. What we do, we see the retracement to the 13 right there via the wick, the rejection, and the move down to the 200. Okay, so let's recap this. We have a cross here. Price is extended, wait for the retracement, enter, got a continuation. Here is where traders get it messed up, if you will. You see, we have the 200 EMA here. So if price action is above the 200 EMA, we are simply biased to moves of which price trends up. So we're looking for moves of which price trends up and bounces off the 13. We could see this here clearly. The day before, we have a trending day. We have our EMAs intertwined. What we call this, or EMAs intertwined, at Trade 1348 is an EMA sandwich. When EMAs are converged and intertwined and braiding, that's usually a signal of chop. After all, 13 averages is matching 48 averages. So yeah, and we have a convergence and we have chop. So we want to make sure we avoid this type of setup here. This is simply chop. Until we get a breakaway, of course, the 13 goes ahead, breaks away from the 48, and we have a very bullish candle. This is a market open candle. This is pretty wild here, right? Now, there's a couple of ways to enter here, especially on a bullish candle here. And this is what Trade 1348 sought out to solve. I'm going to show you what that looks like in a second. However, you don't necessarily want to just trade the crosses, but what you can see here is how profitable these crosses are relative to sentiment and bias. This purple line is my 200. Yes, this is my 200, and you can see how price action loves to follow or stays within the trend. Okay. Now, I want to show you guys something here. I got an ugly drawing here. Now, this ugly drawing was because if you had the sentiment to be bullish, which I was attempting to illustrate at a moment in time. Let me right here. If we were bullish here, we would have wanted price to be above the 200 and of course the 13 and the 48 to cross. Does that make sense? So our sentiment is bearish by default because 13 has already crossed at or about here. We're now below the 200 and we're trending down, which brings me to some tips and tricks that you should be aware of. When you are trading against the trend, you should expect the 200 EMA to be your stop, right? The 200 EMA is the average of 205-minute candles, or if you're on a daily, 200 days. And so you would have to assume that that is a very solid level. After all, it's an average. We go ahead and we think about little Billy. You guys got your kids, right? You know that your C student doesn't become an A student overnight, right? It's like, hey, who the fuck are cheating off of, bro? Like that's uncharacteristic. People are who they are. Price is what it is. Over averages, you have to trust that that's what it is. The 200, right, is the mother of all EMAs. Expect a rejection of sorts. Okay. And with that being said, I do not like to trade against it. I do not like to take these type of trades going against the trend. I do not. I like to take these type of trades right here. Okay, so as promised, I'm going to illustrate the evolution of the system because, well, I got a lot of shit when I launched this. Oh, it's just an EMA cross. Shut your ass. Listen, at the end of the day, the market is all about moving averages or averages in general. Candles are noise. Anybody want to argue that? Candles are absolute noise. I can prove to you that candles are noise by virtue of changing what my chart looks like and using a different instrument, aka Renko, which is a price-based illustration of price, not a time-based illustration of price. You see, candles give you an open, a close, and all the noise in the middle. And so we use EMAs to attempt to standardize price. Standardize price. Give it an average. Okay. Everything in the market is exponential moving average, smooth moving average, weighted moving average, VWAP, whole moving average. There wouldn't be moving average indicators if that wasn't the common denominator of all things market. Now, for those who say, well, lagging indicator, you're absolutely right. But what we want to do is capture a trend. We do not want to capture a candle. And this is where beginner traders get it absolutely fucked up. You're attempting to capture a candle as opposed to a trend. So here we go. We broke below the 200. Now, I want to talk about my trade that I took here. And in order for me to talk about this trade, I'm going to head on over to NQ. I want to show you guys something. So yes, we got the 1348 here. Essentially, what we had was price bounce off the 200, which was great, right? As it should, because the sentiment is bullish, right? Until we get a whole candle close. This is a half candle. This is half a candle. This is why we wait for candle close. Half a candle there. We wait for candle close. We want a whole candle right down here somewhere. That's what we want, a whole candle. So let me explain this trade here. And what you can see is the evolution of trade 1348. So first off, I have to turn on Titan. So Titan now turns on what we call trade designs. And you can't see it too well, but our trade designs also help you with risk management and allocation, right? Where you input your 1% relative to your portfolio, and it tells you how many contracts, stocks, shares you could buy, whatever. Okay. Let me zoom out here. Get out of there. Okay. So what we see here is the 200. We don't trade against the 200. We are waiting for a candle print below the 200, guys. You're going to see this in real time. The candle has to print and close. Print, close, hold, and go. Okay. Let me go ahead and remove this. Now, what you also see is this indication right here. This is where I made my money. When I got the signal to go long and I played it up and through this wick. Now, what did that look like? Well, if we go to a replay, we could see what that trade design looks like. That trade design upon replay, there you go. Entry, exit. This is a 1.5 to 1. And we zoom in on there. You can see that that's 1.45 to 1. I should go ahead and make my fonts bigger for you guys, right? So let me go ahead and do that. Let me change my font size, my inputs. Let's see. We have a bunch of options here. We're going to change this to large. Large. There we go. So this table should get larger. And why is it not? There you go. Finally, larger. Hopefully you can see that. So basically what happened here, we got an entry. I saw the breakup to 13 also coincided with an entry point here. And there goes the level, right? What we do with our system is, again, we're talking about an evolution, right? We include predictive levels. What we show you here, not only do we respect the MAs, not only do we respect the 200, but as it stands, we have to respect levels. You see rejection here at a level, rejection here at a level, rejection here at a level, right? Again, all of this was built on top of 1348. So when you go ahead and say, well, it's just a cross, you can start with just a cross. Absolutely profitable. 13 crosses above the 48. If you can capture that candle, awesome. If not, wait for a retracement and a bounce off the 13. Do not trade into the 200. You're going against the trend. Ultimately, you could get hurt here pretty bad. You can get hurt. Now, having awareness of where your levels are gives you context as to how the market's going to move. Now, remember we talked about how the 200 EMA can act as like a do not go? Well, that's why you see this hesitation on this candle, which is now being pinned between the 200 and the level here. So let's zoom on out. Now, beyond that, you see bands. And so what we're doing is we're attempting to smooth price action. So we're smoothing on top of smoothing with the 13. We smooth price action even further with our bands. Of course, we got trade designs that can be risk to reward based on our levels. This is 1348. And then what we do is with 1348, what we are attempting to do is have our traders make an attempt, right, to ride a trend. So what we do is we incorporate something called GT 500. So GT 500 allows the trader to assess what's truly going on with the market. So therefore, if I see a 1348 move to the upside, GT 500 lets me know, hey, does not make sense. Alternatively, if we got a 1348 cross here with a green, GT 500 says go. You see, we have an entry here. We're bullish. Green here. Go. As you can see here, entry here. We're bullish. Let me zoom on in so you can see the entries. This is an entry here. Bullish. We go. Okay. So there's usefulness in what we call GT. So what I'm going to do is I'm going to minimize my EMAs. And what you're going to see clearly is that this is basically a Super Saiyan level 5 of the 1348. So we started with a cross, and then we added intelligence to the cross with logic and rules baked in, allowing you to trade the crosses more effectively. Entry here, entry here. We have an entry here on the break, an entry here for the continuation upon retracement. There you go. We have an entry here. Looks like that was also a retracement. Let's turn on our EMAs and see what that looks like. There you go. You see, retracement. Of course, a retracement and a bounce. It's going against the trend, so not as profitable, right? But it gets us in this trend. Of course, now we got a signal to the downside of which is not valid until GT turns red. I want to quickly interrupt that segment because what we see here is 1348 coming on down. Now, remember what I just illustrated to you is we were using Super Saiyan level 5, which is right here. And of course, we wanted a candle close and hold below the 200 EMA. And this, boys and girls, is where you make your money. I make a lot of money doing this for a living. As you can see, I'm trading just a puny little Top Step account. But if you follow me and you're a member of the community, you've seen me make $1 million in a week, $1 million in a day. You've seen it all. And there's no argument from my community of 17,000 traders because they see it as well. Make sure you guys stay tuned because I will be bringing up students. We will be doing interviews with students who are just absolutely killing it. Absolutely killing it. Anyways, I'll see you over at Trade 1348 if that's what you want to do. Otherwise, you can add the 13 to 48 and the 200 EMA. And then once you become a believer, we can step it up and bring you to the next level because what we've done is taken it to the next level. And of course, I got stats to prove it. 100% trading. And how many trades? We can zoom on in here and you'll see 8 trades and 5 trades, 13 trades, no losses. That's it, guys. Signing out. Peace.